everyone. Alright, welcome back to another weekly review. Let me just open up the stream so I can see the chat in case I get any questions. Alright. Yeah, let's get started. So, reviewing week 22. Forgot the economic calendar. That is very important for this week, especially. A little bit of a tricky week for a lot of people because Powell was speaking 2 days in a row. There you go, I got it. So Powell spoke on Tuesday, and Wednesday he was testifying in front of, I believe it was the Congress, or I don't know what to call him. But this obviously caused a bit of volatility in the 10 a.m. hour, and then that volatility was really kept in as a seeking to short environment. You saw that there were spontaneous, very quick moves in price that played out those days, and would have been better to see those large ranges that are nice and clean. Wait till the lunch hour. Thursday is CPI, and then this is where most of the volatility was being kept for. Most of the volatility occurred at CPI and PPI. So those were the biggest news this week that everyone was waiting for. All the people expecting the CPI to do a certain thing where we're keeping their money to put it into the market until CPI. So that's where after the release, you saw the highest probability price action, which moved. If you look at the daily chart, those days, Thursday and Friday, moved pretty well compared to the rest of the week. But let's get into what I was looking at this week. Alright, so Sunday, so after a bullish week, I don't see anything the Nasdaq is reaching for. Therefore, on Q, which is the Nasdaq futures contract, can continue to rise higher. So I just need to clear my throat. Sorry. Alright, after this buy side liquidity was got taken, it's allowable to see an order block come into formation. However, I would rather take it one day at a time from that point instead of banking on a complete reversal. So what I'm saying here is that if I see an order block form, or what seems to be an order block, so if we have a down close candle that closes beneath one of the previous up close candles, I'm not immediately going to say it's an order block, it's going to be a reversal. Instead, I'm going to take it just one day at a time and say, okay, well, what is the next day going to do? Is it going to expand? Is it going to turn the order flow into bearish order flow, far past the discount area, and try and remain intraday instead of completely saying it's a reversal and going like that with my daily bias before looking at the intraday price action. So after this buy side liquidity is taken, it's allowable. Oh yeah, I just read that. Gold is on its way higher, likely due to the worry about a liquidity crisis in the bond market. So you see that gold is starting to run higher. Now there's a lot of interesting things that played out in the market in the past couple of weeks. We have a risk of a currency liquidity crisis in the bond market. So the Federal Reserve is not buying back any bonds. They're selling bonds, and if they're selling bonds, well, and you have trillions of dollars of bonds that need to be liquidated to raise cash, because countries may need cash, you're going to have a problem selling those bonds, and it could lead to a huge, even bigger bear market into the bonds which would drive the interest rates for those yields up for the bonds heavily, making the US dollar even more attractive. But as you see, gold is on its way back up, and I believe this week China started selling their own bonds in treasuries to raise cash and basically refinance their debt in U.S. dollars. Right, so they sold those loans that they had to the U.S. government that they borrowed. I guess they lent the government money and they borrowed from they got the loans from, and U.S. borrowed from them. I don't know how to, if I worded that correctly, but they're selling U.S. Treasury bonds, and so that's just showing that they're even more into the dollar and not going against its bricks. So the fact that gold is going up could, I like, it doesn't mean that something's gonna happen, but just the fact that it's starting to trend a little bit shows that maybe geopolitically there's starting to become a lot more worry, and so people are putting their money into gold, which is why it's starting to go up. So I would be watching the geopolitical situation closely, seeing if anything plays out, and seeing if this bullish candle will continue next week into gold, right? And instead of just consolidating a lot as it has been doing. The dollar seems to be having trouble rising higher. There's a noticeable trend which could house tons of liquidity, and this may induce price for a dollar to fall into the short term. And there are relative equal lows which could be targeted to induce higher prices. Let me get rid of that. So I'm talking about these relative equal lows. So if we trade down to here, maybe we could then use that to see higher prices, take that liquidity out, and see higher prices. All right, the dollar crashing a little bit. I still maintaining a bullish bias. I don't think the dollar is going to go lower, especially with China selling all those treasury bonds and renewing their debt in U.S. dollars. It's just showing that I don't want to talk about that too much. To be honest, there's still a lot of things I might get wrong about all that stuff because I don't know all the information. It's just a headline that I saw. But I need to look more into that before I talk about it. And I'm trying to stay trading related. But we had this inverse fair value gap, which I was watching to see, okay, is it going to provide any resistance? And we had the sell side liquidity, which would be like the other target that we could reach for and make a low in. And then the buy side liquidity, once we hit that, we go to the buy side liquidity. All right, so this is the daily chart for the dollar. Looking at the daily chart, we can see this is a clear consolidation. And so I'm just talking about the summer, basically from April. Really, we've just moved sideways. We haven't really went anywhere since April. So we've been moving sideways, and this has been creating a very sticky market, a very tough market. I'm talking from a broader view. If you're looking at all the markets together, the dollar, the fact that it's moving sideways, gives the other markets the ability to move freely. And usually when the dollar consolidates and it's not trending a specific direction, it's not always, but sometimes more slow in the broad view of the markets. So just noting that sideways movement, sideways price action, and then seeing maybe if we can hit one of these extremes, sell side or buy side, that houses liquidity in order to get this to break out of this consolidation and start to trade to an even higher time frame liquidity level. And this was my 5-year bond chart. Same thing, we have relative equal lows, relative equal highs. It's kind of moving sideways. I want to see if if it starts to go up a little bit, the buy side liquidity, and we have a move lower than to sell side liquidity to take out those lows, and then that could kind of get it to start really moving again on a higher time frame in a certain direction. And now I think that's it. Oh no, there's just the NASDAQ 1 hour. Yeah, so this is on the 1 hour chart. I said overall I'm uncomfortable trading and trusting a bias. I will keep focusing on the hours chart and looking for premium to discount or discount to premium conditions using an IPTA 3-day range. Currently only willing to go lower as a bias. So I had this level in mind, and I said, this week, I believe that we're not going to reverse completely. If we do show a down close candle like an engulfing candle, I'm going to be careful and take it a day at a time instead of timing the top. But from an hourly perspective, right, this is where the liquidity is, and I want to see if we're willing to make a run for that level there, which we actually did, but later in the week during CPI. So, and we went up from that area. I wanted to, I didn't say it here on the on Notion, but what I wanted to happen was Monday, Tuesday, Wednesday, sort of go lower, or maybe Wednesday go lower into this area, and then CPI bring it higher, and then Friday move into the CPI range. But instead, Monday, Tuesday, Wednesday went slightly higher. CPI went all the way down to this level, and then Friday brought it higher. And for the other markets that I just talked about, we have the dollar, or is it gold, still a bit on its way higher. So I'm seeing that trend sort of continue that I talked about. And then the dollar did get closer to that sell side liquidity I was watching. It's almost hit it. So we'll see if that happens next week. And then bonds did go higher slightly. This is the 5-year, so it's on its way to that buy side liquidity. We're going to see now we're in a premium, right? So less favorable conditions to be buying in. That would have been, it would have been better to be buying inside this order block down here, the 17th and 24th week order block, because you're beneath that 50%. So we'll see if it's going to continue and it's going to run to the buy side liquidity. And that's it for the pre-week analysis. And then let's go into Monday. Monday is no news, so expect a slow day. Now, set another all-time high. I honestly don't know how long this will keep making new highs. I am just saying that it could keep going forever. It could keep going to 30K if it needs to, right? Because there's no liquidity higher. There's nothing stopping it from really going higher. It's making me a little bit uncomfortable, right? That just means more patience. Wait till it gets into a discount, and then you could try and go along instead of trying to always time a reversal. So hourly chart didn't do too much manipulation before trading higher. Going forward, I will carefully evaluate this if this will become market maker sell model back to today's low. Yeah, so this is Monday's price action. We did not make it to that low, which is what I wanted to see at the beginning of the week. But we started to trade higher. So remember, CPI and PPI are Thursday and Friday. So most of my trading is going to be done after CPI and then after PPI. That's when the high impact news is, and that's when all the volatility is going to be introduced into the market. So I'm really waiting until those days, and I'm just watching what the price does ahead of that. So what I'm seeing now is maybe we could have a market maker sell model with that low and then that low, and seeing, okay, is this, I want to be careful with this. Is this a possibility? Okay, this is the 15-minute chart. You see we just dipped down into an area discount inside that London range, right, from midnight to around 6 a.m. and then we moved into that range, not quite trading at the low of it, but just beneath the midnight open. That from there we go higher after chopping around in the morning. We have a nice move, a nice manipulation at 10:30, and then we run higher into the lunch hour, just consolidate some more until the last hour and go higher. So very hard day to trade, right? It did move. You did have some nice moves that day, but a lot of consolidation, a lot of seeking to show you want to be very careful trading these days, like Monday. And that's why I didn't trade at all Monday. I didn't really look at the chart much. This is the Dow, and I just am pointing out that the Dow, you look at 930 and look at the 930 open on the NASDAQ, it's completely different, right? It's much weaker than the NASDAQ here is, and so I really didn't like that, and that's very typical of a day that doesn't really move well. You're not going to have these indices correlated as much. Okay, let's see what I say here on the 950. I saw the 950 candles bodies respect the bearish order block and leave a balanced price range, and I was interested in seeing 50% of the wick or less to be respected while the body's staying inside the order block. We ended up closing below the initial 9:30 open, which introduced liquidity and induced a market shift in the last hour macro 15:15 to 15:45. Played out nicely to deliver to premium. So I'm talking about this run on liquidity. So we had this order block which resisted price, and we had one run here. We quickly wicked up though, and we had another run there and quickly wicked up. But this time, notice the bodies. If you take away the wicks, right, we have a clear consolidation and manipulation with the bodies into a deeper discount to the rate, the 15-minute fair value gap, and midnight open. And then we have a nice run higher at 10 after 10:30, which brings us into the London close to make a high and then consolidate until the last hour to run finally to a higher time frame, or well, to a bigger. I think it might have taken out last week's high in the afternoon, or maybe in the morning it did that. But I think that's after accumulating relative equal lows, price made a decent run higher once she formed an order block. Notice it took a lot of time and patience to create this move, and any unseasoned trader would have probably blown his account long before getting to this move. Zooming into the 950 price action though, you can see how the big wick created balanced price ranges, prevented price from trading into it too much during the first sell side run to midnight open. Right, so we have a huge wick created, and then we immediately come back beneath that fair value gap, and we don't even get to this area here. I remember actually I was tape reading this with this. I swear it was not that day I tape reading. Let me check, because this it should have been Tuesday. I was tape reading this with somebody, but no, yeah, it was Tuesday that happened. Okay, so it's just a very similar price action to what happened tomorrow then. So we leave this breakaway gap open, we go below, and then we come back to the breakaway gap, find more resistance off of it inside the 5-minute order block, and we're very choppy. Right? We're not really going down to the relative equal lows. We're creating those relative equal lows and leaving a lot of liquidity down here, which finally gets swept more clearly later at 10:30, and then going higher. And you can see how we have really nice price action actually at around 11 o'clock during the 10:50 to 11:10 macro. That's when the lunch liquidity starts to get ran, or the lunch macro starts to come into play, or the lunch hour, I guess, well, the London close macro, I guess you want to call it, really acts nicely here. And that's because we consolidated all morning. So if you see that there's a huge consolidation and price isn't really going anywhere, and there's liquidity higher or lower, and you see a certain one of those liquidities be taken, well, then you want to frame the other liquidity to be taken during one of those macros. Okay, that's I think that's it for Monday. Maybe there's one more. More erratic and overly long consolidation in the afternoon to produce another run higher. Yeah, this is the afternoon wasn't really nice, but the last hour did run nicely. Obviously, though, I'm looking at it and there's just nothing I can see that would entice me to actually trust that run higher. So I'm just putting this chart here just to look back though on for future occasions. But there's nothing really I liked in the afternoon. And then we have Tuesday. We saw a consolidation candle today. I want to see how the next day will deliver price. I'd expect to leave liquidity at both high and low of today's candle. The liquidity levels I'm currently using to form a bias. This is what I'm showing over here. The buy side liquidity and the sell side liquidity. I will be studying order flow and using these levels to figure out what is going on. Powell testified today. This kept ugly price action lower. It does look nice in the afternoon, however, of course, after Powell finished testifying. This was, however, way beneath midnight open. Alright, so here we have the midnight open, and we have price, which I guess, oh yeah, in the afternoon, it does move pretty nicely because you have, once Powell's done, it was like 2 hours and a half testimony. So around 12 he was done. And you'll see the wicks early in the morning are very ugly, not really leaving any big fair value gaps, not really expanding in one direction. But then look what happens in lunch hour. It really starts to get a lot better, seeing bigger wicks down, and then those bigger candles down too. which could bring you to, we're actually leaving fair value gaps, could bring you to trust more direction in the afternoon. But anyways, hold on.
It's 5 minutes.
Sorry, I was asked the question. So yeah, we ran out this consolidation from overnight that you see here, formed that order block, used that wick of the order block to go lower. It was just really ugly and really slow, and it's also an hourly order block too, as you see there. That didn't quite reach the body, but it reached the wick. So it was just really ugly, really slow. That's all. It was not really something that you want to love trading, I guess, or that I would love trading. And it didn't really look all that good anyway. But price is consolidating, and it really starts to move at the 1050 London 10 macro once again after taking liquidity. Made an initial run lower, and then even then, like, I would have expected this to work, this fair value gap, but then only then it ran lower, continued going down to a discount. So this is those days you don't want to try and trade those days when Powell was speaking. You want to wait till the lunch hour, the afternoon. Even in the lunch hour, it's not really that pretty because it already kind of ran lower, and we're way beneath that midnight open, which is just less of a premium. Something that's harder to trust, if you're trying to trade and trust a trade. And this is the 30-second chart. I did like 9:30 open. I was watching 9:30 open, and it was pretty nice because you see we had a bit of consolidation ahead of the 9:30 open, and we made a run higher to manipulate higher, and then ran lower down to the consolidation I was talking about on the higher time frame. So this was pretty nice, but other than that, the first 40 minutes where you go to the lower time frame, you can find these nice moves. Right, from a 15-minute chart, it really doesn't do anything all that huge. Like, once we formed the higher time frame PD array on the 15-minute chart, the order block, we've already ran down to the sell side liquidity. We're already way beneath the midnight open, and so there's not really much to do from a 15-minute perspective. And from the second chart, you can find a couple more trades, a couple more opportunities, but it may be harder or not comfortable to do so. Now, Wednesday was the day before CPI, so another day which Powell's testifying could still move a little bit, but I expect it to be ugly once again. So huge buy day occurred today. I don't know how I feel about this happening ahead of CPI. This definitely induced a lot of early buyers. Here's a keyword: early buyers. So look at how far up CPI ran up, right? This closed way above the previous day, which I said had consolidated, would be liquidity at the high and the low, and my initial target was the current week low and then a low beneath that on Friday. So we had a lot of sell side liquidity that did not get hit, and I'm seeing how, okay, CPI could come out positive. I expect it to come out positive. If it does come out positive, then you're probably going to have a lot of people that are thinking price is going to rip, but it has already ripped. So I'm thinking, this would be the perfect opportunity to sweep all that sell side liquidity, right, which is what happened during CPI, but I'll get to that. So I'd like to maybe see an attempt lower to trade to the sell side liquidity or some discount. All right, so this is what I said on Wednesday. It was at 1 in the morning. So kind of like I'm talking about the future here. I'm not talking about what happened at the beginning of the day Wednesday, but I'm talking about tomorrow's CPI. The hourly chart traded to a discount order block at the low of London range. We ran higher from that area. I was willing to see price trade to London lows, but this did not occur. I was clear, however, that I should not chase it after hitting midnight open, and to study order flow, which showed by 12 that she would run higher. I did not expect her to run as high as she did, though. So, talking about those London lows, I saw this trend during Asia, and I saw this trend during London, and I got up and I said, okay, well, we kind of have to see a retracement. We're not just going to open up and go higher. We need to see some sort of manipulation, a retracement into a PD array. And I was looking at maybe some fair value gap or on the 4-hour chart, I believe down here. So I said, okay, if we get down to this low, that would be like the final kind of PD array. And there's also the order block that resisted price at the midnight open. But that day I was just targeting the midnight open. So I was looking to trade to the midnight open, and we did that, and then we went higher from there. All right, this is the 15-minute chart. Just giving you a bit more context. And I'm also using this as a measuring gap, which I would use tomorrow, Thursday, as kind of to get an idea of really how big and where that move is going to go. Right, but on the 5-minute chart, you have the 9:30 open, which makes the Judas swing higher. We make an initial attempt lower, retrace into this fair value gap, and then we have a little bit of up close candles that creates that idea that price broke out and is now going higher, and then it reverses. Right, so you have a classic basically a breaker setup, and runs back lower to the sell side liquidity, which does the exact same thing as it did up here for the breaker setup, bearish but bullish, just on a higher time frame. So you have an initial run higher, gets people into the market, stops them out, and then it goes higher. And it goes higher all the way to one deviation of that measuring gap from the midnight open. Right? But there's still a lot of liquidity at that London low, so I'm still framing that we could have a run. And that's why I framed we could have a run down to that sell side liquidity during tomorrow's CPI event. So price failed trade London lows and found support minute open. I was open to see a retrace into London at most London lows after having the buy side tagged out by higher manipulation, which could form a bearish order block. This nice and solid move down was the perfect inducement for a lunch run higher after Powell was done speaking. Price notice again, Powell only finished speaking around 12, and that's really when price expanded quite nicely, or around that time, a bit before, I believe. The market maker sell model was there. Market maker sell model. There were two. I put two places. I said that wrong. Two places I wanted to get in for a short. Highlighted below. So there's here, which I was tape reading this with other people, and I said that this would. I have that video on my YouTube, and I said this would be a good place to short, and I held it initially mentally to this area. And then sell side liquidity was the final target. And then over here, once we closed beneath that 5-minute gap, we came back into this inefficiency inside the 5-minute gap, and then that was a strong area to resist price and then send it lower to run that sell side liquidity really quickly to the midnight open. Right, and I didn't take this trade because it's ahead of CPI, but also because I was not really, if I was with other people, so obviously I didn't want to trade, but it's mainly because it was ahead of CPI. Even ahead of CPI, though, you can see that the algorithm still delivers. It's just a lot more, it requires more patience. Like the move higher was this run higher, and it required, a lot more patience. And it manipulated very nicely, though, in the morning to make that move. So it's not always just going to consolidate, but sometimes it's just a bit harder to spot is all. And Thursday was the big CPI day, and a big down close candle after those consecutive days higher. Right, price went from higher. Manipulate. I did that wrong. I made these at it was like 1 a.m. because I was done work at that time. So apologize. I'll have to fix that after. Open off the CPI release before running down. All day to form the new week low. Right, so we formed a new week low, which is what I was looking, and then we went to the target I was initially looking for on Sunday. All right, this target, I wanted to see that sell side liquidity get hit. So CPI went all the way down there in one day. All right, so this is why I said I wanted to wait until after CPI to trade, and not really do anything ahead of it, like anything really, just tape read, because it's perfect example right here. It just took out the whole entire week, all those up close candles it did all week in just one day, right? And not even whole day, half a day. So you can see the manipulation occurring though off the release going higher, and the release was softer than they expected, which is as someone who's trading fundamentals, someone who's trading the news, you're going to think that, well, price is really going to go up because it's positive CPI. Inflation's on the way back down. That means there's more chance the Fed will cut rates, and so you're going to be thinking, all right, it's time to buy. Obviously, it's not what happens. It stays above the midnight open and reverses. Problem is, the manipulation happened at 8:30, so you get that expansion at 9:30 during the open, and it left me uncomfortable to I like to see 9:30 be the manipulation and then get in for a short at the 10 o'clock hour, but instead it manipulates. 9:30 opens up and then sends it lower to the sell side liquidity. You see right ahead of 9:30 open, we have that run on stops. We balance out this price range, use it as an inverse, and then we have that short-term high get ran out. And I don't think we ran a single other short-term high afterwards. Well, maybe later in the afternoon, but all morning, no. So after this, 9:30 opened up and sent it lower. There was this short that I liked that I did say that I would. I don't know if I was. I don't know if I was supposed. So I had a recording that didn't work. So I made a small 5-minute video that I'm gonna post later today, because the recording did not post of that day. But I was interested in seeing it go down from here. It was 9:30 open, right? So you don't want to trade right at the open. I'm not comfortable doing that. But it did go down from there, and then it consolidated a little bit to get into a trade, and it didn't happen, right? So it just went lower in there, and it just meant I didn't have a trade. And that's just the 30-second chart. I believe I'm just showing that. Wait, no, it's not I'm just. Oh yeah, this is what I was seeing actually at the time. So we were beneath the midnight open, and I was trying to get price to come up at these relative equal highs as a manipulation. So I saw this inverse fair value gap on a 30-second chart, and this was a mistake, right? This was not good because obviously my bias was lower. I was talking about it all week. I was talking about it on Sunday. I wrote down in my journal I would only look to sell today, but I'm still trying to frame along because I wanted to get into the market. I wanted to have my model there since I had been talking about it all day. My time to trade starts at 9:45, and there was no manipulation, right? After that occurred at 9:30, and so I'm basically banking on there being a manipulation instead of just letting price go to its area, and following price, not price following what I want it to happen. And that's hard sometimes, where you just gotta sit back and say, okay, I may want this to happen, but it might not happen. And Friday's another example of this, but this time I want to start doing more of these where I show my charts before 9:30 and then after 9:30, right? So I do this on paper, like I write down the candles on paper, but I actually want to show it now in the chart and talk about it. So this is how they look like before 9:30 on Friday. I was knowing we traded to a discount PD array. So if you measure up down here all the way up here, we have the 50% discount. We come into the daily fair value gap into a discount. So now we could bounce from here and start to bounce this price range. Seeing my weekly draw on liquidity get hit, I was interested in higher prices from here, right? So if you recall on Sunday, I showed that I was looking for that level. It's a daily fair value gap and a 4-hour fair value gap. So we found support there. Manipulation occurred lower at the sell side liquidity. So we actually, if you look at just the bodies, we manipulated here at during London around 1 a.m. beneath those bodies, and then we quickly ran back down because they're relatively equal wicks. We quickly ran back down to take those out off the news release and then resumed the delivery higher. But the time to get in was during the London session, right? It wasn't. It was already gone. Train left the station after the 8:30 news release. It's way above the midnight open, and then 9:30 it will do the same thing as it did yesterday by just opening and going higher. I knew that, but my model isn't there, and I didn't try and change my model. I just accepted it, and I did something else. So it's okay. but it was nice to see it go up the way I thought it would, and that's enough. I don't need to always be making money on every single day. Alright, and this is how I believe how it closed. We're at the post. Yeah, so this is how it closed. It went higher to rebalance that fair value gap, or that range left by CPI. And now, if you compare the NASDAQ though to the S&P 500, so NASDAQ on the right, ahead of that move lower on the CPI, watch how the S&P fails to actually go lower. Right? Usually the NASDAQ is the leading index, it's the bigger market, but you see here that it actually failed. The S&P failed to go as low as the NASDAQ did beneath its week low, and the NASDAQ went way beneath its week low. So there's bullish S&P there, and ahead of that bullish S&P, we had a bearish S&P. So you have the bodies making those lower highs, and then you have the S&P, which the bodies are making those higher highs. Right? So I'm looking at the bodies, not just the wicks, because the wicks can distort. The wicks may or may not actually show what's going on. Like sometimes the wicks will be accurate, sometimes it won't. It's just a wick, it can be distortion. The bodies is really what matters, because if you turn on a line chart, that's what a lot of investors look at. I don't have an example of a line chart, but well, actually, just if you press that line chart there, this is what a lot of investors look at. They look at those bodies, not just the wicks all the time. So that, or where did price close, basically is what a lot of investors look at. So you want to keep an eye on the bodies, and here you see that there was a crack in correlation with the NASDAQ making that lower low. So which one would you want to trade if you're trying to long? S&P. Okay, so you see how much higher the S&P went, creating relative equal lows, or highs, I mean. And now the NASDAQ is a little bit weaker. I don't know what this means yet. I don't want to try and anticipate anything for next week, but right now I am noting the order flow does seem to maybe be bearish. We could leave this high, short-term high, maybe for a little bit, but we'll see what happens next week. Right, we have this sell side liquidity which got drawn to, and a reclaimed order block which acted. Well, this is all for next week, but today we just had a nice run higher to the 50% constant encroachment of the hourly fair value gap from that manipulation in the morning. And this is how it looks like on the 15-minute chart. Right, as you can see, there's really nothing after 9:30. There's nothing that I can sit there and be like, yeah, I want to take that. Right, where's the manipulation? Right, where's the order block on the 15-minute chart that's formed? It just leaves a big wick. Right, and on the 5-minute chart, the only nothing back here I would like. The body is, where do they manipulate? Do you see consolidation and nice manipulation? You don't. So you do see a bit of consolidation and manipulation after, though, at 10:07, but we're way above the midnight open, and so even though it does continue running higher, I only go long beneath midnight open and go. Oh. Alright, I think I just disconnected for a little bit, but yeah, that's it for Friday. And I'm gonna post the stream. Oh no, it keeps disconnecting. Alright, it keeps disconnecting, so anyways, I'm done, so it's a good time to stop. And yeah, thank you very much for watching, and have a good rest of the week, and good luck next week.